Welcome to the Simply Financial podcast. I'm your host, Christopher Calandra. This is episode number 15 of season number 4. I want to talk to you about recent legislation that was passed. It's called the CARES Act. Formally, it is the Coronavirus Aid, Relief, and Economic Security Act. That's a mouthful, so we're going to use the CARES Act. I wanted to touch on 4 retirement areas that are impacted by this legislation. Number 1, required minimum distributions for 2020 have been suspended. There's no requirement to take money out of IRAs for the 2020 year. And it's not just IRAs, it's any account that would normally be subject to the RMD rules. Also note, this is not a push-off, meaning that you do not have to double up in 2021. You don't have to take it in 2020, and you're not going to have to take out 2 in 2021. This is probably, in my mind, the most impactful retirement planning aspect of the CARES Act. So that's number 1. Number 2, 401k loans are changed. You now can borrow up to 100% of your balance, up to a maximum of $100,000. So under the old rules, you would only be able to borrow 50% up to $100,000. Now you could borrow up to $100,000 or 100% of your vested account balance. Keep in mind that the 401k itself, the employer-sponsored retirement plan itself, must allow for loans. Not all plans allow for loans, but if they do, the 401k loans have been made more liberal. The other thing that the CARES Act does in terms of 401k loans is it extended the loan repayment from 5 years to 6 years, meaning you'll have a little bit longer to pay back the loan. So that's number 2. Number 3, and this could get into the weeds a little bit, but employers and Social Security. Employers can push back their portion of Social Security payments until December 31st, 2021. At that point, they would owe 50%, and then the balance, the other 50%, would be due at the end of 2022. What you want to appreciate here is generally employers and employees each pay 6.2% in Social Security tax. It shows up on your W-2 as FICA, F-I-C-A, and that payment or that tax or Social Security payment is good up to $137,700 in wages. And so what they're doing in the CARES Act is giving employers a little cash flow relief that they could postpone those payments out into the future. If you're self-employed, there's a self-employment tax. You actually are paying, if you're self-employed, like I am, you're paying both sides of that 6.2%. You're paying as an employer, as an employee, but you're eligible to push off the Social Security payments just like other employers. So you could push it back to 2021 and 2022 if you choose to. So that's number 3. And then lastly, there's a coronavirus distribution exception for retirement plans, so that if you've been impacted by coronavirus, and the definition is pretty broad. Obviously, if you have the virus or somebody in your family have the virus, you'd be eligible, or if you've been impacted financially. It's very broad. It's not exactly clear what the letter of the law actually will be, but the spirit certainly is anyone impacted by the coronavirus, which seems to be a very big pool. You can take money out of your retirement accounts up to $100,000 and avoid the normal 10% IRS penalty. Normally, if you're under the age of 59 and a half, in most instances, if you take money out of a retirement account, you're subject to federal, state income taxes, as well as a 10% penalty because it's deemed to not be a retirement plan distribution because you're under the age of 59 and a half. What the CARES Act does here is it waives the 10% penalty. The taxes are still due, although you can opt to spread the taxable income amount over 3 years. So you could take up to $100,000 out without the 10% penalty, and you could spread out the taxable income. Let's use a simple illustration. You take out $75,000. You can take all $75,000 and pay taxes on it in the year of distribution, or you can spread it out and do $25,000 in each of the next 3 years, spreading out the tax liability, which is a nice advantage because you get the use of the money right away, but spread out the tax liability. So those are the 4 key retirement planning areas that are impacted by the CARES Act. I hope you found this information worthwhile. The government is doing a lot now, so it's a challenge for all of us to keep up on all that's going on. But if you have questions, if there's any way that my team and I can help you here at Elliott Wealth Management Services, please reach out. You could call us directly at 888-959-5904 or reach out to us through our website, www.elliottwealth.com. And I will also throw in as an additional ask, if you could subscribe to this podcast. If you haven't already, that would be wonderful. Thank you so much. I hope you are healthy and safe during this very difficult time. Thank you much.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.